Stocks kicked off July with a bang today, but not necessarily the bang you would expect. Small cap stocks were the ones that surged today. Materials was the sector that broke out and outperformed. Gold, oil, volatility all moved a little bit higher. If you want today's trade idea and full breakdown, watch the complete market outlook video at marketscholars.com with a link down in the description below and as well as in the pinned comment. July kicked off with a big shift in tone. The Dow Jones rallied 400 points and small caps led the way higher here. You can't see it's at 0%, but it was up over a full percentage point. You can see the nice gain today. Tech took a rare breather. It was actually down. Here's the four market forecast charts for the major indexes. Again, the Russell, the Dow outperforming, the NASDAQ slipping, and that's why your S&P again was down, but just a very marginal amount. Under the surface, materials surged more than 2.5% with strong moves in dividend and defensive names like XLV, XLP, financials to a small degree. All these kind of cyclical areas outperforming. So a rotation into this kind of the other side of the cyclical coin away from technology and communication services. We also saw a bit of a macro safety bid. Gold jumped higher again, second straight day that it jumped higher. Oil reversed higher today. You can see commodities and as a whole were up. And the VIX, of course, if we take a look at the VIX, it jumped up higher again today, marginally, but up 0.6%. All pointing to some growing risk-off signals, even as equities themselves overall are climbing. This mix of rotation, slightly elevated volatility, and commodity strength makes today's action a classic summer shift in leadership, and it could be the start of a new trend here. If you're getting value from these quick daily rundowns, go ahead and like the video, share it with a trader friend, subscribe to the YouTube channel so you don't miss tomorrow's update. Now let's dig into what's really moving the market beneath the surface. We're seeing a little bit of a classic risk-off rotation to kick off the second half. The materials sector, which again is not something that typically leads the market, surged nearly 3%. Staples down here at the bottom also broke back above its moving average. Dividend-related ETFs like healthcare, utilities, real estate, all jumping up higher today, showing strong leadership. Even the small caps and the Dow Jones show leadership today. On the flip side, technology stocks pulled back, along with the NASDAQ 100, the XLK, XLC. Big winners previously, not so much today. At the same time, we saw gold move up and oil prices move up a little bit, marginally off of that low point there. And of course, the VIX ticked up higher. That's a sign that there are some macro risks still on the table. You can see bonds maintaining their trend higher. When traders pile into commodities and volatility, it usually means that they are starting to hedge a little bit, whether it's geopolitical headlines, whether it's inflation fears, whether it's what the Fed's going to do with their rate cut cycle, when they're going to start the rate cut cycle. We're also seeing some clear signs of style rotation here with value stocks outperforming growth. That has not been the case for the last few months, but it was a pretty significant move here today. This theme, really was going in the other direction up to pretty extreme levels over the last few sessions, but today it completely reversed and broke down below multiple moving average here. This is a defensive posture and a potential warning flag for growth bulls if it continues. So with rotation heating up and volatility slowly on the rise, it seems we're entering the second half of the year with a different tone than what we just barely had a day ago, or especially the last few weeks. So I break down exactly what this shift means in a lot more detail in today's full market outlook video, including some technical levels I'm watching and a new trade idea that actually kind of bucked the trend of this macro uncertainty. You can watch the full video right now on marketscholars.com. It's available for all of our subscribers, including our foundation members. That initial tier at Market Scholars starts at $29 a month. Basically means that these videos work out to being less than $1.40 per video. If you want that deeper analysis, actionable ideas, and tools to navigate the market, join us there and watch that full video. Thanks again for watching today. Have a great rest of your Tuesday, everybody, and we'll see you tomorrow.